loan-to-value ratio practice. Question 1. Elena encounters the market in which existing mortgage loans are bought and sold after origination during an offer review. Which principle should guide the analysis? Option A, equity. Option B, acceleration clause. Option C, secondary mortgage market. Option D, Fannie Mae. The correct answer is option C, secondary mortgage market. Investors evaluate the credit and payment characteristics of the loan pools. The borrower generally continues making payments to the designated servicer. Loan sales replenish lender funds and support continued lending. Question 2. Which choice best matches the description as standardized expression of the cost of credit that includes interest and certain finance charges in the lease negotiation described? Option A, balloon payment. Option B, defeasance clause. Option C, FHA- insured loan. Option D, annual percentage rate. The correct answer is option D, annual percentage rate. Required calculation rules determine which charges are included. It is not necessarily identical to the note interest rate. The figure helps consumers compare loans with different fees and rates. Question 3. During review of a warehouse in Ocean City, the parties discussed the federal regulation implementing consumer credit disclosure requirements under the Truth in Lending Act. Which term applies? Option A, or Regulation Z. Option B, PITI. Option C, equity. Option D, Fannie Mae. The correct answer is option A, Regulation Z. The regulation governs advertising and disclosure of credit terms. Triggering terms in an advertisement can require additional information. It does not regulate brokerage agency relationships. Stressed about your real estate? We can take real estate for you remotely and undetected. We always guarantee a pass and payments only after results. To send us an email, scan the code or tap the link in the description and let's get it done. Question 4. An exam scenario presents a lender charge for processing, underwriting, and creating a loan. Which answer is most accurate in the title examination described? Option A, acceleration clause. Option B, loan origination fee. Option C, a due-on-sale clause. Option D, fixed-rate mortgage. The correct answer is option B, loan origination fee. It is distinct from prepaid interest used to alter the note rate. The fee is commonly stated as a percentage of the loan amount or as a flat charge. Settlement disclosures identify the amount and party responsible for payment. Question 5. A licensee preparing for a due-diligence meeting must recognize gradual repayment of a debt through scheduled installments of principal and interest. Which concept does this describe? Option A, acceleration clause. Option B, secondary mortgage market. Option C, amortization. Option D, equity. The correct answer is option C, amortization. Each payment is allocated according to the loan terms and remaining balance. Full repayment occurs at maturity only when the schedule completely reduces the balance. Early payments on a level-payment loan usually contain more interest than later payments. Question 6. Which answer correctly classifies a situation involving a loan whose interest rate may change according to an identified index and margin in the inspection period described? Option A, equity. Option B, loan minus value ratio. Option C, debt to income ratio. Option D, adjustable rate mortgage. The correct answer is option D, adjustable rate mortgage. Borrowers should understand the initial rate adjustment rules and maximum exposure. Rate adjustments occur at stated intervals and may be limited by periodic or lifetime caps. Payment amounts can rise or fall as the rate changes. Question 7. At a property management audit in Bowie, Nora explains the federal law addressing settlement service disclosures, escrow practices, and prohibited referral arrangements for covered mortgage transactions. Which real estate principle is involved? Option A, RESPA. Option B, hypothecation. Option C, Fannie Mae. Option D, PITI. The correct answer is option A, RESPA. The law restricts kickbacks and unearned fees connected with settlement services. It does not set real estate commission rates or guarantee loan approval. Covered consumers receive information about loan and closing costs through required disclosures. Question 8. A transaction file for a waterfront parcel raises an issue involving a security instrument involving a borrower, lender beneficiary, and trustee. Which answer best resolves the classification? Option A, balloon payment. Option B, deed of trust. Option C, secondary mortgage market. Option D, discount point. The correct answer is option B, deed of trust. The borrower's repayment obligation remains in the promissory note. State law determines the foreclosure process and the parties' precise rights. The trustee holds authority connected to the security arrangement for the benefit of the lender. Are you looking for real estate actual questions? Visit our website pokerexams.com to access real estate study guide with actual questions and answers. Scan the QR code or click the link in the description to get real estate answer key today. Question 9. Which concept should a buyer representative apply to facts involving the owner's value interest after subtracting liens from the property's market value? Option A, pity. Option B, regulation Z. Option C, equity. Option D, prepayment penalty. The correct answer is option C, equity. The owner's net value can increase through principal reduction, appreciation, or improvements. It can decline when market value falls or additional debt is placed on the property. The amount is not the same as cash flow or taxable income. Question 10. Gavin is studying a rule concerning the borrower's written promise to repay a debt under stated terms. Which terms should be chosen? Option A, or regulation Z. Option B, RESPA. Option C, hypothecation. Option D, promissory note. The correct answer is option D, promissory note. It is separate from the instrument that pledges real estate as security. This document establishes the personal obligation, interest rate, payment schedule, and maturity terms. The lender may enforce the debt according to contract and applicable law. Question 11. When a mixed-use property transaction involves the federal credit law requiring clear disclosure of borrowing costs such as annual percentage rate and finance charge, which answer identifies the controlling concept? Option A, TILA. Option B, deed of trust. Option C, balloon payment. Option D, discount point. The correct answer is option A, TILA. The goal is meaningful comparison of credit terms before the consumer becomes obligated. The law regulates disclosure of credit cost rather than property condition. Certain residential credit transactions also carry rescission rights. Question 12. A practice question describes the combined housing payment components of principal, interest, taxes, and insurance. Which response is best? Option A, the defeasance clause. Option B, pity. Option C, deed of trust. Option D, prepayment penalty. The correct answer is option B, pity. Escrow accounts commonly collect the tax and insurance portions. Lenders use the total to evaluate the borrower's recurring housing obligation. Association fees and mortgage insurance may also be considered in underwriting even though they are not part of the acronym. Question 13. During an offer review, which principle is illustrated by a loan provision allowing the lender to declare the entire unpaid balance due after a qualifying default? Option A, TILA. Option B, promissory note. Option C, acceleration clause. Option D, hypothecation. The correct answer is option C, acceleration clause. Notice and cure rights may apply before enforcement. The clause supports foreclosure when the borrower fails to resolve the default. The remedy converts future installments into an immediately payable obligation. Question 14. Which answer states the concept associated with a federal corporation that guarantees securities backed by qualifying government-insured or guaranteed loans? Option A, a conventional loan. Option B, loan minus to minus value ratio. Option C, FHA minus insured loan. Option D, Ginnie Mae. The correct answer is option D, Ginnie Mae. Its role concerns the securities rather than direct consumer lending. The organization does not buy conventional mortgages in the same manner as the major sponsored enterprises. The guarantee supports mortgage-backed securities containing approved loan types. Question 15. A buyer handling a condominium unit in Lansing must identify coverage protecting a conventional lender when the borrower has a high loan minus to minus value ratio. Which choice is correct? Option A, private mortgage insurance. Option B, adjustable minus rate mortgage. Option C, a due minus on minus sale clause. Option D, FHA minus insured loan. The correct answer is option A, private mortgage insurance. The premium compensates the lender for part of the default risk. It does not protect the borrower from foreclosure or eliminate the debt. Cancellation rights depend on law, payment history, and the remaining balance. Question 16. During a title examination for a cooperative unit in Novi, PREA needs to identify the rule described as a mortgage program providing an eligible veteran borrower with a federal guarantee benefit. Which answer applies? Option A, equity. Option B, a VA minus guaranteed loan. Option C, secondary mortgage market. Option D, pity. The correct answer is option B, VA minus guaranteed loan. Eligibility and property standards must be satisfied. The guarantee reduces lender risk and can permit favorable financing terms. The program is not a direct grant of the purchase price to the borrower. Question 17. A appraiser is reviewing a duplex in East Lansing. Which term describes a charge imposed under the loan terms when principal is repaid before the permitted time? Option A, or Regulation Z. Option B, hypothecation. Option C, prepayment penalty. Option D, balloon payment. The correct answer is option C, prepayment penalty. The provision compensates the lender for early termination of expected interest income. Borrowers should review the note before refinancing or selling. Its enforceability and disclosure are controlled by law and the loan program. Question 18. At an inspection period, a Michigan exam candidate encounters the following description: a mortgage provision requiring release of the lender's security interest when the secured debt is fully paid. Which concept is being tested? Option A, adjustable minus rate mortgage. Option B, deed of trust. Option C, discount point. Option D, defeasance clause. The correct answer is option D, defeasance clause. The provision protects clear title after repayment. Satisfaction of the obligation removes the lien created by the security instrument. The borrower is entitled to evidence that the encumbrance has been discharged. Stressed about your real estate? We can take real estate for you remotely and undetected. We always guarantee a pass and payments only after results. To send us an email, scan the code or tap the link in the description and let's get it done. Question 19. Imani is assisting with a townhouse transaction in Grand Rapids. Which principle applies when the facts involve a loan provision allowing the lender to demand repayment when the secured property is transferred without permitted consent? Option A, a due minus on minus sale clause. Option B, amortization. Option C, loan origination fee. Option D, or Regulation Z. The correct answer is option A, due minus on minus sale clause. Federal and state rules may create exceptions for certain transfers. A buyer should not assume the existing financing can remain in place. The clause limits the borrower's ability to transfer the property subject to the existing loan. Question 20. Which answer most accurately identifies a government-sponsored enterprise that buys qualifying mortgages and supports secondary market liquidity in a real estate transaction? Option A, mortgage. Option B, Freddie Mac. Option C, private mortgage insurance. Option D, pity. The correct answer is option B, Freddie Mac. Retail borrowers normally obtain funds from lenders rather than directly from this enterprise. It establishes standards for loans it is willing to purchase. The organization helps connect mortgage originators with capital-market investors. Question 21. A question arising during settlement preparation concerns pledging property as collateral while retaining possession and use. Which choice gives the best classification? Option A, a due minus on minus sale clause. Option B, defeasance clause. Option C, hypothecation. Option D, prepayment penalty. The correct answer is option C, hypothecation. The borrower grants a security interest without physically delivering the real estate to the lender. Default can allow enforcement against the collateral under the security instrument. The concept differs from transferring full ownership to satisfy the debt. Question 22. While analyzing an office building, Amina must apply the concept involving a government-sponsored enterprise that purchases qualifying residential mortgage loans in the secondary market. Which answer should be selected? Option A, promissory note. Option B, balloon payment. Option C, secondary mortgage market. Option D, Fannie Mae. The correct answer is option D, Fannie Mae. The organization does not usually make retail home loans directly to individual buyers. Its activities support liquidity and standardization in housing finance. Loans must satisfy applicable eligibility and documentation standards. Question 23. Which real estate term is defined by a large final payment due because scheduled installments did not fully amortize the debt? Option A, balloon payment. Option B, RESPA. Option C, amortization. Option D, prepayment penalty. The correct answer is option A, balloon payment. The borrower makes periodic payments that leave a remaining principal balance at maturity. The term must be disclosed clearly in the loan documents. Refinancing risk increases if the borrower cannot pay the final amount when due. Question 24. In a transaction involving a retail suite, which rule controls when there is a loan with an interest rate that remains unchanged for the stated term? Option A or Regulation Z. Option B, fixed minus rate mortgage. Option C, FHA minus insured loan. Option D, discount point. The correct answer is option B, fixed minus rate mortgage. The borrower trades rate certainty for the pricing available at origination. Principal and interest payments are predictable when the loan is fully amortizing. Taxes, insurance, and association charges can still change the total monthly housing expense. Question 25. A salesperson asks about a security instrument creating a lien on real estate to secure repayment of a loan. Which answer provides the legally accurate concept? Option A, debt minus to minus income ratio. Option B, discount point. Option C, mortgage. Option D, RESPA. The correct answer is option C, mortgage. Foreclosure procedures may be used if the obligation is not performed. The debt itself is evidenced by a separate repayment promise. The borrower retains ownership while granting the lender a security interest.